I'm not going to lie. If you are on YouTube because you want to learn how to invest and get rich quick, this video is definitely not for you. You need to bounce, find something else. Hey guys, welcome back to the channel. It's Pete here. So over the last couple of weeks, I've seen a shift in the kind of questions that I've been getting on my Instagram account in my DMs. And I've seen more of a theme of people asking me about penny stocks. And I don't know whether it's something that I maybe missed. I certainly know that I have received very sporadic questions about them, not in any decent volume. But the last 2, 3 weeks has definitely been noticeable. And I'm being asked about stocks, my thoughts on stocks that I haven't heard of. And when I ask people, well, how did you come across this? They've watched YouTube videos. And today I thought, let's go down the rabbit hole of YouTube videos and have a look at some of these videos where people are talking about penny stocks to buy. And that's what I want to talk about today, because this is something that needs to be said. And if you're a first time investor, you need to hear this as well. And if you are a first time investor, this is the first time that you're finding me on this channel, and you want to learn how the stock market works properly, you don't want to be sold the dream. We talk about reality here on this channel. So consider subscribing, hit that notification bell. I post every Tuesday and every Friday at 5 p.m. And before you leave, make sure you smash the like button. It will really help me out with the YouTube algorithm. Let's get going, because there's a lot to talk about. Okay, so let's start this by clearly defining what a penny stock is. So a penny stock is a small company that is trading at less than $5 a share. Now, with penny stocks, it used to be anything trading below $1. They've changed that in recent years, and it isn't uncommon to find penny stocks on the New York Stock Exchange, for example. However, most penny stocks are traded on over-the-counter bulletin boards or in privately owned over-the-counter market groups. So the difference between the two of them, or why the differentiation is important, is that anything that goes into the New York Stock Exchange, for example, has criteria, rules, things that it has to do, the company that is, in order to qualify to go onto that exchange. On over-the-counter bulletin boards or over-the-counter market groups, there is no requirement for any financial submissions. There are no strict due diligence requirements that these companies have to be met, that these companies have to meet, I should say, in order to be listed on these OTCs. So the selection criteria isn't quite the same. And this is one of the reasons why penny stocks can be problematic. And we'll talk about this a bit later on in the video. But first and foremost, I want to talk a little bit about why penny stocks are going to be attractive to first-time investors. Because I get it, guys. You've just started out. You've downloaded your Trading 212, your free trade, your stake, your Orca app, and you're excited about investing in the stock market. You've watched so many YouTube videos. You've heard people talk about it on TikTok. You just want to get started. Unfortunately, you cannot approach buying companies, investing in companies the same way that you would approach going shopping. Okay, and I'm going to use this analogy, and it's not the perfect analogy, but hopefully you'll get the point. Now, if you were to go shopping, for example, right, human nature tells us that we need to search for the best deal possible, because we want to feel as though we got a bargain, right? So if you wanted to go and buy an Audi, and you saw two Audis pretty much exactly the same spec, you wouldn't want to pay £17,000 for it if you get it for £14,000 or £13,000. The human being in us wants us to get a bargain, to get a deal. So oftentimes we try to go for something that is low cost, because we feel that we're exchanging a lesser amount of money for what we want. We cannot approach investing in the same way. In fact, if you, as a first-time investor, open up Trading 212 or your free trade app, and your selection criteria and how you feel that you're going to get started is by picking the £2 stock or the $2 stock over the Tesla at 791 as of today, then you are completely approaching it wrong. And I've had these questions before. Tesla's a bit expensive, not overpriced or overvalued. expensive. And you can't approach investing like this. When you're investing in companies, one of the key things that you have to bear in mind is fundamentals. So, what does a company do? What products, what services do they offer? How do they make their money? Are they making money? Are they making profit? What does their future projections actually look like? Are they invested into the business? What is their return on investment? What is their, earnings per share? What is their debt versus asset ratio? These are all fundamental pieces of information that you need to make an informed decision about a business. And if you have all that information, you can then decide to say, well, if it is Tesla, for example, do you then want to pay $791 for a share? Or do you, in the case of Trading 212 and some of the other apps that are available now, buy a piece of that company via fractional shares? You make that choice based on what you're seeing about the company. Again, another analogy, you wouldn't go and buy this Audi without, testing the brakes, making sure that the engine actually runs, that it doesn't have any mechanical faults. If you're going to do that kind of due diligence buying a car, you need to do that kind of due diligence buying a company. And the difference is with a blue chip company like Tesla, Amazon, Facebook, Microsoft, big internationally renowned companies, you can do those checks. With a penny stock, you can't. You could be buying a car that doesn't actually run, and if it does run, doesn't have any brakes. It's no good to you. It's not fit for purpose. And this is where I get that it's attractive to first time investors. You cannot approach investing looking at the cheapest share price as the best option for you to begin. It doesn't work like that. If that is your approach, then you're completely approaching this wrong. You need to shift that mindset a little bit. And this will lead us on to maybe some of the issues that I feel, and I've already mentioned some of them already with penny stocks. But there are a couple that I do want to really kind of get into, and I'm going to give you some tips that I think will help you moving forward. Okay, so the first issue that you have with penny stocks, and we've already kind of alluded to this, is that they are not blue chip companies, right? So you can't do these essential checks that you would normally do with a penny stock because they're a new company, and a lot of the time they don't actually have a finished product or service that they can take to market. But this is the most important thing that I really want to get across here because we are talking about investing, and it is the acknowledgement that liquidity typically doesn't really exist with penny stocks, i.e., you don't typically have a market of people who are willing to buy and sell these shares in enough capacity to actually create a market. Think about Tesla or think about Amazon, popular companies. How many people want to buy Tesla? How many people want to buy Amazon companies? So you have thousands of people, millions of people across the world who want to buy Tesla stock, who are actively trading Tesla stock on a day-to-day basis. You don't have that same marketplace when it comes to penny stocks because, again, serious investors are investing in blue chip companies, not penny stocks. And this is simple economics, guys. In order for you to drive up the share price, and we're going to talk a little bit about that in a moment, you need to have someone who is willing to buy that in the first place. You need to have the demand to meet the supply. And once you have demand, if the shares are in short supply, the prices go up. And liquidity becomes really, really important for things like penny stocks, but they typically lack them. And this leads on to my tips that I hope will help you make the best decision for you. And again, this is not financial advice. I don't control your money. I'm not your mom and dad. But these are key things that I hope that you do take on board. So we've already alluded to the first one, and the first one is do not approach buying stocks looking at the share price as your qualification criteria. It is not like buying a car. It is not like buying a cheap tin of baked beans. This is an investment. You are buying a company, an asset that you hope is going to appreciate in value. And in order for you to understand whether it is going to appreciate in value or not, so you can make a judgment call, you need things like fundamental research. So financial analysis, what the business actually does, their product, their services, their strategic advantages within their sector, what sector they actually work in, what competition they might be facing, what edge they have over said competition. These are all fundamental pieces of information that you need to know. I've also alluded to this second one. There is always going to be risk when you invest in any company. And this is one thing that none of these YouTubers said. I mean, I've probably watched maybe about 20 or so videos today. In except of maybe 2 videos, they were clear that, guys, this is risky. This is risky stuff because these companies might go bust. And if you put all of your money into this, you could lose 100% of your money. And this is factual, guys. We are so caught up at this point in time in the rewards, the make money, make money, make money. And so many of these videos have spoken about how much money you can make. There's going to be, 10x, 20x, 100x. You have to buy now. Watch this right now. And I do get the YouTube sentiment of trying to get people to click on your thumbnail to watch this video. I've used that tactic in this video purposely as well to get people to watch this. And hopefully you've made it to this point. But it isn't all just about making money. There is always going to be risk. And you have to be able to manage your risk and accept that you will lose or you can lose all of your money in penny stocks. The third thing that I think is really, really important is that you have to get your priorities right in terms of your investment hierarchy. And I'll maybe do a separate video on this specifically. But if you are starting out to invest as a first-time investor, this is your hierarchy. I'm going to give it to you for free right now. You need to start with your ISA. You need to be making sure that you're investing into a pension. This is non-negotiable, guys. You'll be thanking me later on, right? So ISAs, pensions. Then you're moving into a general investment account once you've used your ISA allowances, making sure that you're investing into funds, ETFs, those kind of things. Then, once you've completed those 3 foundational key things, then you move into individual stocks and you start with your blue chip companies first. Once you've done all of those, the last thing on the list would be to have a look at penny stocks, but only with a small amount of your money. I did a video where I explained my own personal investment strategy. It's literally that one right there. Go watch it. It's called a core satellite approach. I invest in funds, in ETFs. I use my ISAs, use everything that is at my disposal, pensions, right? All of those things before I go and buy individual stocks. And I buy blue chip stocks. I hope this has helped. I hope that you found this useful. Please let me know in the comments whether I've been speaking nonsense this entire time, whether you don't agree with me or not. I'm sure that many people don't. Hopefully you've gained some benefit from this. As always, I appreciate you watching this video. If you've not listened to the podcast this week, definitely go check it out. It is right there. And I do have a bit of a favor to ask of you guys. I have been nominated for the British Bank Online Financial Influencer of the Year award. You can vote for me. By voting, you will be entered into a prize draw to win £1,000. Your support will be much appreciated. I'm in excellent company, some very, very big names, and it will be very, very nice to win. So if you gain value from the channel and you've enjoyed this video, please consider actually voting for me. I will post the link to do so in the description and in the comments below. But as always, thank you so much. We have a live session this Sunday at 9:30 p.m. I hope to see you there. Just remember, guys, money is a tool, life is for living. Catch you later on.